The banks are looking at the fact that, you know what, there's some negative headwinds coming out there. So we probably need to put some emergency fund just in case some of our loans and mortgages are going to go into default. So
welcome to another episode here at our podcast series. We are back in the studio and we are going to start over because this microphone is...
All right, take two.
Take two.
All right.
Welcome to another episode of our podcast series, the Tfteam. We're back in the studio, and we are here without our producer.
I know.
Gone,
but not forgotten.
Not forgotten.
No, she had to step away for a family emergency, and our thoughts and prayers are with you, Steph. I hope you have a safe flight back, you and your hubby.
That's right. And of course, we miss you dearly because Pierre was late, as usual. But
Stephanie wasn't there, so everything is lax today.
Yes. But what's not lax are the earnings of the bank. So 4 of the big 6 have announced earnings when the time this is being recorded. And last week we spoke about TD, earnings, profits beating expectations, still laying off people.
2% of the total workforce, yeah.
Right, but what we've been seeing, the trend of the banks so far, they've been providing for loss in terms of loans.
Yeah, so it almost seems like we're the advocates for the banks. We should.
I'm wearing the bank
colors, Scotia colors. So they should be giving us a cut out of those particular profits. But no, as I always say, if you can't beat them, then join them.
That is correct.
Right? So we've got Scotia. That showed increased profit.
No, Scotia profits went down.
Oh yes, that's right.
But that's the only one that's went down so far because they've had to make extra provisions for losses. But their dividends,
which is funny,
their dividends are up.
Yeah,
go to the people who are BNS shareholders.
Yeah. So as you know, when it comes to investing, one of the things I look at is dividend and dividend growth. I only invest in companies that provide with a healthy dividend. So Scotia, even though the profits went down, their dividend went up. But the reason their profit went down is they've allocated a bit more towards loan provisions, right? So that's kind of a theme that we're seeing is that the banks are looking at the fact that, you know what, there's some negative headwinds coming out there. So we probably need to put some emergency fund just in case some of our loans and mortgages are going to go into default. So they've increased kind of that emergency fund that we'll call loan provisions, just in case that, and now it's in the billions. So most banks are setting aside billions of dollars in case that their loans go into default.
And okay, so BMO profits are up, National Bank profits are up, those being announced. So we're waiting for CIBC and RBC. What is going on with these people? All right. But anyway, that's coming up soon. But what that means is that the banks have always, as you said, always provided a safety net for investors. Now, I'm still going to, I don't know, advocate, anyway, I'm still going to mention TD. The reason I'm mentioning TD is that the stock keeps appreciating.
Yeah, 94.
Now, we're not accustomed to seeing the bank stocks appreciating in this manner, but the bank stocks have appreciated, and yes, we're still getting our dividends. So think about if you've just started, and I think you mentioned this last week as well, the importance of maybe reinvesting those dividends.
That is correct. So if you're not going to buy individual banks, then I strongly suggest that maybe buy a Canadian dividend fund. And most Canadian dividend funds are heavily invested into our big 6 banks, also insurance companies and utilities. So you're getting a healthy dividend from those type of funds.
With the indication that we mentioned last week, maybe recessions are looming and so on, maybe now is the time that the banks are showing you, hey, this is the time that we get into this market for the banks, because, and I, for me, this is my point of view.
Whoa.
I have a point of view.
I know, scary.
Oh my gosh.
Yeah.
I do have these moments.
Yeah.
But I use the banks as a safety net against my high risk stocks. So the Nvidias and the Teslas and, Amazon.
The Magnificent Seven.
Yeah. They're volatile because they trade large volumes and their prices can be influenced by tariffs and no tariffs and European tariffs on, European tariffs off. Apple was affected and so on. But the banks will continue to remain consistent for me. And you mentioned, if you don't want to buy individual bank stocks, you can buy the funds and also a dividend fund and also the other high dividend stocks that we talked about last week. So that gives me an opportunity to say, okay, these might be volatile, but I've got these that are there. They're going to appreciate maybe 1-2% over the year, and I'm still going to get my dividends.
So again, our theme is always emergency fund and diversify. So what you're talking about is diversification, still within the equities section. So not putting all your eggs in one basket into the banks, but also putting your eggs into also utilities. Again, still safe and secure, and also more aggressive tech companies. So if the techs don't do so well, you're hoping that the others will do a bit better, and on average, you should do, a decent return.
Okay, so we're recording this video as well. Nvidia earnings are coming up.
That's right.
They're coming up.
Yeah.
What do you feel?
I feel good. No.
You feel good.
So
did you invest when Nvidia went down?
No, I did not.
Below
I know
100?
you did. I know you did. You're more aggressive. You're more aggressive.
The old guy can't take the risk.
I can't. I lost all my hair with all the risks. But the anticipation is that Nvidia sales are going to be supercharged. So anything up to I've read up to like 66%. So that should have a positive impact on the market. So by the time you get this, our individuals, our viewers are watching this, the results would have already come in, but this is what we kind of anticipate. So
and I saw this as well, that shareholders who've kept on, hold on to Nvidia, they didn't let go, they ended up benefiting in the long run and their portfolio increasing. And I think you said this. You said in the bad times, the stock market has cycles where it's going to experience bad times. But if you've bought high quality stocks, you tend in the long run to make the money.
Yeah, and long run, 5 to 10 years. So if you're not going to invest for 5 to 10 years, then you're really saving. And if you're saving, then don't go into the market. Buy a GIC, buy a money market fund, right? Something that is safe and secure, because as we've seen, especially this year, your red tie friend down south, when he speaks, the markets go up and down. So a great deal of volatility. But yet, in the long term, the markets tend to go upward.
That's right. So, did you go and see the king?
No, I didn't. I stayed here and listened to our king.
The guy's on our money.
I know. Not yet. We still got Queen Elizabeth.
Queen is still in
so the new
circulation.
currencies that should be the case. But the one good thing about having the king in Canada and delivering yesterday the throne speech is the fact that it kind of shows to your best friend that we are an independent sovereign nation. And actually, we're still a monarchy per se. I mean, yes, we've ratified our constitution, but the head of the state is still the king of England now. So we're separate.
Showing a power of strength.
Exactly. Right. So hopefully your friend will attest to that. I don't believe he will, but that will make him think twice about trying to make us the 51st state.
So King is here, Canada showing strength, the banks looking good, showing strength against the U.S. banks. I think I saw the headline where the U.S. banks are iffy.
Yeah,
that's kind of what the headline said. I didn't go into the articles. And Canada stock market seems to be going up. U.S. market seems to be
up and down.
And that's where things stand at the moment with all the news that's happening, right? We've got another episode that we're going to be talking with. I think we've got an upcoming episode where we're going to talk about credit. And what's going on with young people and their credit, right? I think we want to talk about that because I'm still young. And we need to talk
barely
about midlife. All right. But thank you so much for being here. As always, even though you were late, thank you for being here on time for the recording. All right?
Anytime.
Yeah. You know, we usually do a briefing session. But he wasn't here for the briefing. But we did it. We're happy that we did. And we thank you for watching. Like, subscribe, share. And of course, we've got a whole brand new episode coming up later this week. Take care. Bye-bye for now.
Bye for now.